Well, good morning, good morning, good morning. It is a good morning. Right, so here's a 4-hour chart on ES. Just let you know I'm bullish. I think we're going to try to press higher. And we'll jump into a 15-minute time frame. See that fair value gap right there? I missed that dilly-dally. I'm waiting for this Camtasia platform to start. So this is where I believe we're going to rip up into and higher. Okay, and I may... Let's see if I'll use that one. Right, and then put the stop below there. It's a little wide because it must be for non-farm payrolls. Wild and woolly price action. So right in there, I'll make it white. So it's a contrast. So inside that 4-hour fair value gap, it's in a discount relative to that low, to that high. We drop down. There's a small little gap in here. I'm watching and see how it behaves in here as well. But this is the one that's the inefficiency. Oh, it might give us another opportunity. Oh, I will take that. Thank you so much. All right, so that might look like a lot of money to you, but it's really not in the grand scheme of things. And we'll take 5 off above here. And just so you understand what I'm referring to here and what's making this even important at all, is that this is a Judas swing. Yes, initially we had this little run up in here, but notice it did not take the buy side here, here, or here. This is what they're tricking traders to trust this resistance, okay? In here, this inefficiency, when price started to rally up, and between this high being taken out, right here, and this low forming, that range, if we look through that and we only focus on this segment of price action right in here. Okay, and I'm going to color that yellow. Okay, so all of this, I don't know why I did that. There. So all of this price range that ran from this area here to here, all that price run, what I'm looking at is how price started the rally here, came up to this candle's high, and then it retraded, repriced back down into the low end here. So from this high, that candle, to that candle's low, this is all efficiently delivered price action. Meaning that it's like a paint roller analogy I use. Like if you're painting your wall at your home, when you apply the paint to the roller and you place the roller against the wall and you roll it up, the first few inches of the paint being delivered to the wall, it's ample, meaning that it's a very significant amount of paint being distributed to the wall surface. But eventually, as that roller keeps being pressed higher, it runs out of the amount of paint that would be equally distributed on the surface of the wall. And you'll start seeing these little porous pockets, which is what this is being shown here, this little shaded area, which is that one single candle. Let me take that off now. So this inefficiency here, just like if you were rolling a paint roller with paint and applying it to this area here, well, looking back at where you just rolled the paint roller, this is a little area where the paint wasn't equally distributed because of this very candle. Let me widen them a little bit. This candle here, it's high right there. And the next candle after the big up close candle here, there's a gap where there was nothing offered back down to at least touch this candle's high. So that's what makes a fair value gap a fair value gap. Okay. Now, why did I name it and coin it a fair value gap? It's offering fair value. If you're bullish, and this is the part that still escapes many of you that are running around trying to talk about fair value gaps when you most of the time don't really know what you're doing yet. And I understand the zeal. It's exciting because you're handling something that you know and see it works, and you're discovering multifacets to something that you're on the road to progression, to understanding. But don't try to teach it yet because you don't know what you're doing yet. But I appreciate and love the zeal and all of your excitement about it. But this little area in here, it's lacking movement back down to at least touch this candle's high. Okay, so because this candle's high and that candle's low, there's only one pass in delivery of price, and it's going up. You see that? So with that movement up, how does that redistribute efficiency in market delivery for price? It must do what? Offer it going back down at a later time. Well, we're seeing at 8:30, which is Non-Farm Payroll Friday. This is where we're at. Happy Non-Farm Payroll. The market drops back down into that area, overshoots it a little bit, but that's fine because all of this area in here is a balanced price range. So it goes down into the range. I mentioned it to you live, and it's part of that 4-hour fair value gap. Okay, so the market has shown a willingness to want to reach back up in to this area up in here. So what we're going to be watching now is, does price want to at least trade back above the consequent encroachment of this wick, which is here. And once I drop this level on, and I'll have the quarter segment. Each one of these is a quadrant, and it's not quarters theory, by the way. And what's all this business about Goldbach levels? I don't do anything with Goldbach. The price engines, the algorithm itself, Enigma has no association with Goldbach. Okay, so for the folks that are out there trying to claim that it is, it's not. Okay, stop doing that kind of stuff because you're sowing misinformation, and I'm going to call you out on it. So anyway, let's drop into a 5-minute chart, and you can see the body's respecting that 4-hour fair value gap high. You see that? And our focus is, does it want to trade above that consequent encroachment right here, that midpoint? So I would like to pair my longs with the existing buy stops that are resting above. You might hear my puppies snoring. The buy stops that are resting above this whole high here. So I want to see it go there because there's actual orders resting up there. And the initial run on Non-Farm Payroll generally is kind of like an FOMC event. It's a fake move. And I don't see this initial rally as the fake move. Okay, it's more this trading back down. And this really gets everybody thinking it's going to go lower. And if you're probably watching live streamers right now, they're probably extremely bearish. And I'm not. So let's do this. I set liquidity top. We'll put it over here on the right hand side. All right. So right away, I could be taking something off because it's Non-Farm Payroll Friday. It's moved enough to warrant a measure of profit taking. It's certainly the 5 handles minimum I preach and teach that you should be striving for. But I want to give it some time, let it cook a little bit. And I would like to see it, in the event that it does want to go up here and shake out and then go lower again, I'm going to put a limit order right at the consequent encroachment level, but for just one contract. Because I'm not certain I'm going to be able to pyramid anything on this one because Non-Farm Payroll is kind of woolly. It does some pretty gnarly stuff. So if it can reach above this area here, one more pass up in there, that will allow me to at least get something out of it. And then I can roll the stop to break even. Then I can just sacrifice the rest of the position. And some of you might say, well, why would you want to do that? You're leaving $7,000, $8,000 on the table. And the reason why I'm saying that is because of experience. You're not going to get the big runs or big wins unless you hold for them. If you don't ever hold on to it, you'll never get the big large range days. You'll never get them. So you have to allow for it to sometimes take it all back except for a small little piece. This way it covers costs, it covers commissions, it covers that little scratch, that itch that you have as a trader when you're in a trade. You feel like you have to have something profitable, or it's a total failure. I've invested, a few minutes. It hasn't been very long, less than 10 minutes, and 10 minutes is not a lot of time, so I can afford to have a move on the market, see it pan out, give me a small little piece like it's about to here, and then roll my stop to break even. And it isn't the only time I've made $10,000. Okay, so here we go. It just got taken out, so now I can roll my stop to break even, plus commissions, plus a small little profit. And why am I not jamming it all the way back up here? Because it could respect this same 4-hour fair value gap high. Notice I have it sitting right here. You're probably wondering, well, isn't that rate below that low where there's sell side? They've already done the damage and ripped through all of that. Okay, so what I want to do is I'm going to sit and watch. Does it give me that close? Any close above this consequent encroachment level is going to be like the hand of the dealers, okay, being shown to you. They're going to show you their cards if it can close above that level, meaning that I would like to see it then run up there and hit my limit order. And then at that time, or how it trades there, if at all, because I could be wrong, then I'll determine whether or not I want to take more off, manually, or if I get stopped out. Everything remains, uncertain right now. So I like where we're at here. I want to see, we're on a 5-minute chart. Let me add those levels back here. So I want to see it close above the consequent encroachment level. If this candle can close above it, then that to me indicates that the algorithm should, if it just doesn't already run right up there and reach for it, as long as it closes above there, I'll trust that it will run for at least my first limit order resting above here. But I'm going to be very careful about how it trades here, because it can run up, rip that, and then just drop and fall out of the 450. I'm sorry, the 4,592s. All right, so we closed above it. Now, my mindset is I trust. I don't get afraid. I don't become nervous because we're seeing a down close candle in formation. It doesn't freak me out. It doesn't cause any anxiety. So I'm going to take this Fibonacci off because we've already accomplished the method here by explaining to you what I was looking for. But I'm relaxed. What am I thinking? How far can it go back down? Well, we have these 2 consecutive down close candles. That body right there, that could be treated as an order block. So it can trade back down, rip into this here, and then go higher. I don't want to see it do that, because the fact that it needs to go back down into this as an order block, if it needs to do that, that's far less probability in my favor. I want to see it not do so. So it's not a matter of knowing a PD array and expecting it to be hit and respected. There's also a balancing of seeing the PD array in price, but then also seeing and measuring the magnitude of strength or weakness in the market. In this case, I want to see strength. I want to see price reaching up into, without needing to come back down to a discount array. If it doesn't need to go back down and touch this candle's body, and I'll show you what I mean by that. There. So when you see me showing examples where it's silent executions, I'm testing this as a series, by the way, on the YouTube channel, where I'm doing the executions and kind of like talking about what it is that's going through my mind. I'm giving you the inner musings of ICT as it happens real time. I don't want to see it come down and hit that. But if it does, it's completely acceptable. It doesn't change the underlying narrative that we're going to likely go higher. It just means that it's better if it doesn't come down and hit that, because if it doesn't go down there and starts rallying, then it's really going to be bullish. It's really going to be an energetic price run to the upside. So there's a strong contrast to what you understand in a limited capacity about my order block theory, where you would think, okay, this makes sense to come down and hit that and then rally. But what happens if the market is so strong and not patient enough to even want to go back down into that discount array? That means it's exceedingly bullish, right? And I want to be a part of that move. And I want to be in trades and I want to hold on to my targets when it's indicating those types of things, because it's giving me a great advantage that retail can't perceive in price action. They have no idea what's going on. They have no idea what it's reaching for. I'm sitting here, I'm calmly explaining to you, there's no anxiety, there's no excitement. It's just, this is the stuff that happens all the time. And it's just like the same route that you take to your job. You drive it all the time. You know the person's house on the so-and-so street that you're going to pass. You know all the things. You know the people that you're going to pass that are sitting at the bus stops. It's the same creatures of habit. Well, price action is the same way. After doing it for so long, you get accustomed to it, so you're not surprised. Okay, and surprise invites the elements of fear and greed. If it starts to explode, I'm not going to go, wow, look at that. Where'd that come from? And on the same coin, just turn on the other side, if it were to drop and stop me out, I'm not surprised by that either, because it's the characteristic of this particular day of the month where it can absolutely fool me because it's highly manipulated. I'm going to put that fib back on just to show you in relationship to that wick right here. So all of this was an initial raid, and then it dropped all the way back down into a deep discount. We've had one close above. This one didn't close above, and we're now just below it. So I'm demanding price action to show me another close above here. If this doesn't close above it, I will take 3 contracts off just to fund the position and then get a little bit better payment for my time. Okay, about 40 seconds to the close of that candle. We're on a 5-minute candlestick chart, by the way. I had folks asking, can you do things with the 5-minute chart? I don't like the 1-minute chart. It's too fast. It's the same market. The fluctuations that you're watching from 4585.50 to 0.75, that's happening the same speed on a 1-minute chart. It's happening the same speed on a 5-second chart or a 1-second chart. It's the same. The price action is the same. You need to stop thinking and being imprisoned by time frames. All right, so it didn't close. You see that? So I'm going to take 3 off there. So now I'm well funded on this. And now if it were to come all the way back down in to stop me out, it's completely irrelevant now. I've made more than the average person makes in a week's wage, even a professional wage. And I've done so in just a few minutes of the worst trading environment day of the month, which is Non-Farm Payroll Friday. And look how the market's behaving here. So we're trading into that order block. And this is where I would demand the importance of, no, not importance, but the characteristic that this should send price higher. We're in this area here. All of this price action here was a raid. That's my interpretation of price action. And I'm believing that they're going to want to rip up into this area here because they want to attack people that are short. And they enticed people to get short. But they stopped anyone that was already short ahead of time before 8:30. They come up, knock them out, so they can't get a part of this move where they can get really good profits and cover at a really nice, handsome profit. Then they took it all the way back up here, thinking, okay, there's no necessity for price to do what? Pay long holders. Nobody wants to be long. Nobody would trust being short as a smart money mindset. They want to be long. Dipping down here is the discount. This is all trap. But they canceled out the potential for profitability for anyone that was short that trailed their stop loss right in here. So if they didn't trail their stop loss and were short from back here, where's their stop at? Right there. See that? So as soon as the market decides if it wants to go up here, I will take one off right above this high manually if it allows me to do so. I will not move my stop loss from where it is right now. All right, so here's a little bit of an inefficiency in between this candle here and here. So I'll be watching how we trade here. This is kind of like the last line in the sand for me. We'll shade that green just to have a little contrast. So there's a little inefficiency here. So in a way, it's kind of like a breaker, kind of like a reason for it needs to start rallying here, or it's likely to come back down and touch and maybe trade deeper into that 4-hour fair value gap, which is in that darker blue shaded area here. When I'm trading, when I'm not educating, I don't have all this stuff on my chart. I have just the levels itself, the numbers, and I write them down on a little notepad, and that's what I work off. We're in this last down close candle, and we're inside of this fair value gap, and I'm watching, does this candle have a body that closes below or outside this shaded blue area or green area? Here Piper snoring. Piper's one of my puppy boxers. All three of my dogs are female, by the way. Sometimes I know some of you like to comment and refer to them as sometimes they refer to them as a male puppy or a male dog. I don't have male dogs. I prefer the females, and I don't mate them. I don't make puppies with them. All right, so I'd like to see this candle or the very next candle start to really gain some momentum on the upside and get out of that green shaded area. The longer we spend time in this little area, the more likely we are to trade back down into the top of that fair value gap on the 4-hour chart, which is this level right here. But being in a position like this where your trade is funded, meaning that you've taken something out, anything that can happen right now cannot remove the profitability of this day. Like it could gap down there and hit my stop. It doesn't matter because the profits are already booked. It doesn't matter to my trade psyche where it won't break me mentally because it did it. If it comes back and stops me out, I'm not going to have a bad weekend because I lost money. It can't happen now. It cannot happen that this trade comes back against me, stops me out, and it becomes a negative experience where I can't go into the weekend sailing into it with a smile. See, that's the strength. That's the benefit of taking partials. And that's why I laugh in the face of people that say taking partials is stupid from someone that is anonymous in terms of their ability to trade or be profitable. And there's lots of them on Twitter. Lots of them. They have large followings for no reason. So I like what we're seeing here. See how the bodies are staying just at the bottom of that green box. The next candle, well, this candle we're looking at here, it opened right at the low of the shaded area, and we're working our way up in here. I want to see it get really energetic and start to come up out of here. I believe that, man, she's really snoring over there. I believe that, at 9:30, we're really going to rip up into this area here. If it doesn't do before, it definitely will be where I'm thinking that it's going to really reach up into that at 9:30 and really punish the people that are thinking it's going to go lower. The problem is do I have it in me to navigate and stay with this trade and not get stopped out? I think I'm safe with the stop where I'm at. It's at it's below the fair value gap on the 4-hour charts high. And it's behind all the bodies here. So remember, the bulk of the volume is what? In the bodies of the candle. The wick does the damage. And it just seems like, if I get stopped out, I'm okay. Basically is what I'm saying. And you really want to have your trade. I'm going to take this Fibonacci off because it's really cluttering up the chart. And we've already seen what it was used for. So while watching this, and when I have these inefficiencies outlined from this candle's low, which is right here, this candle's high. That one single pass up, that big candle right here, that is the fair value gap. That fair value gap, because it's an up close candle, makes it a BISI, buy side imbalance, sell side inefficiency. We have since offered sell side. And I don't like the heaviness that we were experiencing in here because it's spending way too much time at the low end of that. I don't like that. It doesn't bode well for the setup. But I'm going to commit to it for the basis of teaching the difficulties, because it's one thing for me to say, I don't like to trade non-farm payroll. And for the people that get out there and they over leverage and they gamble and they guess, and they might live stream it, or they maybe don't live stream it. They don't show it's a live account. They don't show it's live data. For all those individuals that say that, and they always come after the fact. They always come after the fact, say, I made money on this day and ICT doesn't trade on this day. He tells you not to trade on Mondays. I trade every Monday on non-farm payroll week. I trade every single Monday on a non-farm payroll week. But I may not trade a Monday on any other week. I'm comfortable with letting the market have that. So see, we had a close outside that shaded area. So because we had this one single close, it's inside this down close candle. So what I'm weighing out is, okay, well, it could still do what I would like to see it happen and move higher. But the more time we spend drifting lower, the more likely that they'll want to take the 930 run, rip that low, and then come back up here. That's the problem I'm facing with this trade right now. That's what's in my mind. That's what I'm concerned about, but not to the degree where it's freaking me out or making me upset. And if it comes down and does that very thing, I don't care. That's the wonderful thing about how taking partials, knowing where and why you should take that partial, it frees your mind up about needing to be what? Right. That is power. That's strength. Partials remove the necessity for you as the trader, whether you're advanced and you've been doing it for a long time, or you're new and or a fledgling student of price action. It removes that very, very difficult task of managing the impulse to be correct, to be right. Because I'm going to be honest with you, I've said this many times before, and I learned this from Larry Williams. I coined it from many times watching his 4 VHS tape series. You're never right in trading. You're never right. You're never, ever, 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 ever right. You're either profitable or you're unprofitable. Now, how's that possible? I mean, surely you're right if you make money. Well, I guess so. But really, are you? Did you really buy as much as you really wanted to after the trade closed? Because you're always going to say, if I just would have bought more shares, if I just would have bought more contracts, if I would have just bought more lots, if I just would have maximized the contracts they allow me to trade for my combine or my funded account, if I just would have used max leverage, I could have made this much. So what are you saying? You weren't right. Even though you made money, you're saying you weren't right. Because right is defined by you by doing the most. And I'm telling you that's a lie. That's toxic thinking. And that's why that you're never going to be right. So your objective in trying to be right in your trades, that's a foolish errand. And you can't do that. It's impossible for you to be right. Here we are, an opening bell. Let's see it rip up into this, and up here. So I'm going to get my orders ready, because if it does, let me take this off, and I want to just do 3 above there, and I want to do 1 manually if it'll allow me, if we get above here. So these are relatively equal lows, so I'm looking at that. So let me put it up here visually. So I'm watching. If price goes up into that level here and goes above it, I'm going to close 1. Piper. Hey, Piper. I'm sorry, that's Scout. Stop. Settle down. All right, so far so good. I want to see it really accelerate, reaching into that area here. So if I close 1 above this area here where buy side is, then if it gets up to here and takes that limit order there, that will give me 2 remaining contracts that I'll treat as a runner. And if it can get up here, I'm going to place my stop loss right at the high of the 4-hour fair value gap. So it's not going to be much of a change, but I do want to have a little bit more protected on the balance of the 2 contracts, which really won't make a difference in the grand scheme of things. Now, I want you to think about the mindset of who was hopeful in being profitable this morning. They set the trap that it was going lower, then it really dropped down here. The mindset is, okay, the market's weak. It's probably going to keep going lower. And I don't want to subscribe to that view. I want to see where they left traders feeling safe. These stops here that have been trailed from here to here, or those individuals that were short from up in here that have their stop loss here or felt like they had to place their stop above that old high back here. Right back here. Okay? So that's what I'm attacking. I'm targeting that. And I'm running against the logic of a retail trader that is hopefully, wanting to see lower prices, and they're trying to be responsible with their account and using stop orders, which in this case is going to be, their undoing if I'm correct in my trade and it pans out like I want it to, but I don't need it to. That's the wonderful thing. Like, that's a wonderful place to be in your trading, where you don't need it to do this. But if it does, wow, what a feeling, because it profits and it's an encouragement to you. But you don't have any of the negative components that come along with, I need it to be right. Because to be right means, in your mind, you have to be right to be profitable. I can be profitable and not right. Think about that. How's that for logic? I'm looking at this candlestick right here, inside of that fair value gap, right there. Like to see it respect that and start descending it higher. Spending a lot of time in this area here. I'm not overzealous about why it's spending so much time in that consolidation. But in the beginning, as a new trader, time is a commodity that you don't have a lot of in your mind, when you have to submit to the fact that you have whatever time you have left. That's it. However long you're here until you're taken out of this world, that's how much time you have, and nobody knows that. And I'm not saying that should speed up this urgency that you need to learn how to do it real quick, because the urgency of trying to learn how to do it real quick, that unfortunately is a problem, and it causes people to want to rush. They want to get through it too fast without really learning what it is that they should have learned. 2 things are about to happen if it pans out. If it goes above this swing high, as I mentioned before, there's buy side above that. And if it trades into that, top left. So if it trades above that high, I'm going to close. I'm actually going to do, what is that? 3. Yeah, I'm going to do 3. And then if it runs to this one here, I'll be done for the day. Because it's a little late in the morning and my wife just gave me the hairy eye. So we'll have to be satisfied with that. But hear that bird? That comes every morning around the same time. It sits out there on my deck and starts chirping. But it's so fun, seeing how students, do the very things I encourage them to do. And the 2 things I said I was going to do is I'm going to take a profit here above that 93.5 level, should it offer it to me. And let me just do it this way, because it might pull some shenanigans on me. All right, so that way I have limit orders there. So if it goes above it, it'll fill me, hopefully. And then if it does that, then I'm going to roll the stop up to just half of this wick is here. See that? I will roll the stop just below to 45.77 even, which is below consequent encroachment. Okay, that's what's going to happen. 3 contracts will come off. 3 will be left here also. If it really ramps up there, it'll completely close out the trade, and now we'll have one more opportunity to be able to prance around my house like Mick Jagger and tell my wife I told him so. I told him so. Scout. Hey, Scout. It's almost time, honey. Relax. There's liquidity here. There's liquidity here. It's in striking distance, and it is opposed to the underlying sentiment that's been engineered this morning where it's going to go lower, but they canceled out any opportunity for those people that were trying to be short to be profitable. You see that? I mentioned that earlier in this recording. So I'm trusting that I'm on side. On side means that it's going to run for the liquidity that I'm targeting. I apologize if you hear her crunching in the background. She's eating a chicken foot. I give them to them once a day, and I think she was demanding it, basically, that, and she wants to get out and run around. She's in a kennel right now, because if I don't put her in a kennel, she'll be crawling up and jumping on my lap and licking me in the face, and then it would be much more distracting, and I probably wouldn't have been able to stay on track as much as I have been here, even though some of you may think that this guy's all over the place. And I'm doing actually pretty good compared to what I've done in the past. It's a lot better focus. I've been enjoying my time away from social media. I've been away from Twitter. I miss engaging all of you. Obviously, you can see that by me doing this. Just want to take a quick look at the NASDAQ real quick. All right, so it's pulled into its fair value gap as well. Liquidity is resting here. I'm going to roll the stop up to where I said I was going to do it to earlier. So I'm going to lock in. This is rolled up to 3,000. If it goes there, I want to be out anyway. So I've completely removed any concern should it have decided not to go to my limit orders. I've funded myself. I paid the trade. And I removed even further. Good grief. She's she wants out of her kennel, doesn't she? She got her way, just like my wife. I'm going to keep doing this. Oh, there we go. There's a limit order. And then see if we can punch up there and get the other one. And randomness again. There we go. Beautiful, beautiful, beautiful. You better film me. I thought so. So again, one of those instances where I guess this stuff still works. I guess they haven't figured out how to beat ICT. So I've enjoyed my time with y'all this morning. Hopefully you got something out of all this. If anything, if it's inspiring to you to stick to what it is I'm teaching you, it works, folks. I promise you, there's nothing else. There's absolutely nothing else out there that's better than this. This is the market. This is the market.